Hi, this is Shane with the Rational Trader. It is Monday the 18th. Yeah, so first daily video in a while. I've been a couple of weeks of illness rampaging through my family. Though I did put out an extended video yesterday where we talked about the sort of dueling machine learning systems we've got running here right now. That represents the kind of the final experiment I'm running before I put a stake in the ground and decide which approach to take. That stake will be, or one of the forks of those roads, or those forks will be either focusing on a single market at a time, taking more risk, or continuing to focus on multiple markets, but getting very, very choosy. In fact, people tend to think about it in terms of waiting for the best looking trade, but really what we're talking about is identifying the clearest signal in the noise. All right, so what's happening right now is gold and oil are running the let's identify the clearest signal in the noise, and really the primary goal there is to bring down the number of trades. So what we want is, if you're going to trade multiple markets, what ends up happening is we take this defensive posture and then wait for the big play. And the problem is the big play doesn't necessarily come around often enough. It does on an individual market to make that market profitable, like we've seen with the yen and the euro. But in aggregate, it's easy to get a bunch of days in a row where you're taking this defensive posture and just getting nickel and dime to death. And the problem there is that the costs of the trades add up. So the commission costs will end up eating you alive. So if we're going to do multiples, we got to get choosier. All right. And if not, then that's fine. We'll focus in on a particular market. So I'll end up, if I go that route, I'll end up picking a market and trading it, and I'll produce the models for my members that want to trade other markets. That's fine. But as we stand now, we're comparing over the next couple of weeks to the end of March the currencies which are running the existing method against gold and oil, which are running the let's find the clearest signal method. All right, so what we expect to find, our hypothesis is that we'll get less trades overall in gold and oil, and as a result, more profit than the other method, the other approach. All right, more net profit particularly. All right, so for today, what we see is no trades in oil. All right, so let's take a look at it. Not actually a whole lot of movement there. So the open is right there. Actually, that's not true. Right there. So there's a nice up move right there. Okay. Now here's your dilemma. Is that as a human, when you see, this is a nice move there, right? When you see that, you go, I want that trade. Even though the signal itself may not be that clear. So there's a signal there at 203, but we could go look and actually run and see. Okay, well, how what has been the level of predictability of that behavior over the last 6 months, and we exactly know that answer. But as it's a very human thing to go, well, there's I should be making something there, and that's the problem. Okay, so ideally what we want is the system just runs. And you just check it at the end of the day or the end of the week, and you have what you have, and you're not letting this human emotion of anger at missing a move get in the way of the strategy that you're taking, which is looking just for the clearest signal. So gold today also was 0 trades. Let's see, what kind of movement do we have there? This is quite a bit tougher actually, because this is a choppy mass, and then you're rotating around the point of control, which is a dangerous place to trade. You get a nice move here. Okay, so same thing. You could easily go, I want to get that move. It'd be tough to get because once you get that signal, the market doesn't come back at all. It's just falling. All right, in the currencies, they did not, so they lost today to gold and oil. in that, let's see, the yen took a trade here for a loss where it actually got short when the market's turning. So this is a failed break short. You want to get long there. All right, so I took seven tick loss there. And then in the euro, minus 13. So I think there were actually 3 trades. So this is important because we're talking about not just the profitability, but how many trades you're taking. And so in the euro, if it eventually goes over here, we took one here for a long that scratches. And this is during the overnight session. And then a long here that just doesn't quite get 10 ticks. It gets 9 ticks. All right, and so you end up taking a loss there. And then the short here on the break lower, which is late. All right, the market's done here, and it's going to bounce up. Okay, so 3 trades there, 2 losses, minus 13 ticks. And that's it for today. So now we're just going to watch this day by day over the next 2 weeks, and then see, how it pans out in live trading in real time. All right, so for more details on what I'm doing here in gold and oil, you can check out the video from March 17th. That was yesterday. Okay, take care.